Hi, my name is Alex Carlucci with Gustan Associates. I'm going to talk to you about a couple unique manual underwriting situations that a lot of you guys are reaching out to us on the internet about. Now, we always do manual underwrites FHA. So let me just summarize manual underwrites FHA. So there's three aspects to ratios on FHA manual. There's 31% over 43%. That means 31% of your gross monthly income goes towards the mortgage, 43% is all your debts, plus your mortgage payment divided by your gross monthly income. That's the first layer of manual underwriting, and that only requires 1 month reserves in the bank after you close. So after you close, you pay the closing cost, the down payment, you still have 1 month left over. And that 1 month has to be your own money, so that cannot be a gift. All the other funds can be gifts, except for that 1 month reserve. So you have to have your own money for that 1 month. And then we have 37 over 47. That's the next boost up. And that one requires one of the following. 3 months reserves of your own money after you close. You have to pass a residual income test, which is a little complicated. You have to have other money that we're not using towards your income. So you might have gotten overtime the last year. The rule of overtime means you have to have 2 years of it, so we're not going to be using that to qualify you, but it's a compensating factor on a manual underwrite. And the fourth is no payment shock from your current rent. So we got to prove your rent, and you can't increase your rent or your new mortgage payment by 5% over your current rent. And if you do that, if you stay within that range or less, you'll be considered a compensating factor. So you have to have one of those four as a compensating factor, along with not having mortgage lates in the last 12 months or installment lates in the last 12 months, and no more than 2 times 60 on mortgage or installment in the last 24, and no more than 1 times 90 late on revolving in the last 24. That's complicated. You call me, we'll talk about that. But that's the skinny on that. So now if you want to go to the max ratio, 40 over 50, you have to have 2 of those compensating factors. So we have to come up with 3 months reserves and no payment shock, for example, and that would be the compensating factors that would get you to the 40 over 50 DTI. Now, that's manual underwriting. So now a lot of you guys want to get cash out, and we can do cash out on manual underwriting, no problem. So if it's just a regular old manual underwrite because you're getting refer eligible, and it's just a rate and term refinance, you just have to fit those guidelines. If you want to cash out, you can do that, and you have to fit those guidelines. But if you're in a Chapter 13 bankruptcy, that's a unique situation I want to talk to you about today. If you're in a Chapter 13, 1 year into it, and you made your payments on time to your BK, you can still do a manual underwrite, rate and term, no problem. It's the cash out part that I want to talk to you about. You can do cash out, but if you take cash out, your trustee's probably going to require you to pay off your debts. So if you get enough cash out that you pay off all your debts and get rid of your current Chapter 13 debt, and then get some extra for yourself, you can do that if you have the equity. But if you do cash out on a manual underwrite while you're in Chapter 13 or within 2 years of discharge, then you're going to have to pay off. You're going to have to pay off your trustee if you're within the 5-year payment plan, but when you're into it. But if it's after the discharge date and you don't owe the bankruptcy anymore, you can do the cash out without having to pay off the trustee because it's already paid. Crazy. Give me a call anytime, I'll talk to you about that. Number 2, we do manual underwrites on 203K loans. So a 203K loan is a rehab loan. It's where you borrow extra money to fix the house up that you're buying. So you want to buy a house, it needs a lot of work, and you want to get to and you want to improve the house before you close on the house. You have to figure out how much that's going to cost. Well, not many banks will go below 620 credit score on a 203K. Not only would you go below 620, we do 580 and above, but we could also do a manual underwrite on that. So we could do a manual underwrite, but here's the stipulation on a manual underwrite on a 203K. You can't go over 31-43 ratio, and you have to have the 1 month reserve. So if you make really pretty good money, then you're probably going to qualify for a manual underwrite 203K because you're going to be stopped at 31%. So for example, if you make $5,000 a month, gross, not what you bring home, but what you totally gross, your mortgage payment's $1,500 or less, you're going to be able to qualify based on that if you have no debt. Now, if you have debt, let's say you have $10,000 a month in debt, well, now you're not going to qualify because your back-end ratio is going to be way too high. So your back-end ratio has to stay under 43. So 43% of $5,000 is roughly $2,150, $2,150 a month. So you can have $1,500 mortgage payment and another $650 of other debt, like a one car payment for $600. You would qualify under that rule, 31/43 on a manual underwriting for 203K. So there's a couple of unique things I wanted to discuss with you. It's cash out manual underwrite and 203K manual underwrite. We do them. Give us a call, like this video, share it, and if you have any questions, leave the questions below. We'll get back to you. And thank you very much.